Welcome to the Real P&L Trading Show, where every week I share my real accounts, each tied to a specific trading system, so you can see exactly how each strategy performs in real time. I also share my safe wheel strategy for free. So let's get started here. I want to make sure that get some feedback from you guys. And let me know that my audio is working, my video is working, and everything is working properly. So if you let me know, I appreciate that. All right. Also, be sure to post any questions you have before I end the broadcast or as early as possible. That way I don't end the broadcast without answering any of your questions. I want to answer them all. Kevin says you can hear me. I appreciate that. Thank you, Kevin. All right, let's talk about what happened last week. This is my earnings edge account here. You can see on the screen. And what happened last week with earnings edge? I did not trade last week with the earnings edge. Nothing's passed through the filters. So without anything passing through the filters, I'm not going to make a trade. So I did not trade. And I think I need to update my spreadsheet though. So let's take a look at what my net lick is in this account. This is my earnings edge account, 24,471. Let me make sure that that's correct in there. 24,471. So you can see with the earnings edge, since I started my 3.0, which is the beginning of 2025, I got 20 wins and 2 losses, about a 90% win rate. Average win 1,065, average loss 874. My last trade was IBM. I made $1,260. And you can see the results in 2022. I did 63%. The market was down about 20. In 2023, I did 17%. The market was up 24. In 2024, I was down 36%. And I realized, hey, I need to update this thing and see if I can tweak it and make it better. And I was out running the 2.0 version, and I did realize how to update it and make it better with the 3.0. So it was down 36%. The market was up 23. And then so far this year, I started with $6,053. Now I've got 24,471, doing really well. Up about $18,400 and up 304%. If you were to look at the overall, since I started trading this live, I've been sharing my P&L, my net lick every week. I'm up 389%, where the market's up. Well, let's see. Let's see what SPY is trading. SPY is trading at 669.18, 669.18. So the market's up 14.29% approximately here in 2025. And since the beginning of 2022, the market's up 14.49%. So let's see. Yeah, because let's see, we started in 2022 at 474, and now we're trading at 669. So I'll recheck that number. Number looks a little bit low to me, but I'll double verify that later. Okay. All right, so the PL5 Pro, let's talk about that. What's going on with the PL5 Pro? Let me get my account up. Which account is this? The PL5 Pro is my larger account, and I believe it's this one here. Yeah, okay, so my account balance is 440,102. 440,102. Let me put that in there. 440,102. Okay. So with the PL5 Pro, I started trading this live July 19th, 2024. So the last 6 months of 2024, it did 16%. The market was up 6.65. In 2025, I'm actually down 6%. I hope to recover by the end of the year and maybe possibly even catch up to the S&P, depending on what the S&P does towards the end of the year. And the S&P is at 14.29%. So overall, I'm up about 9%. The market's up about 21% since July 19th, 2024. But on a risk-adjusted basis, right, because my drawdowns are going to be lower than the S&P, I'm up around 18. This is just approximate risk-adjusted. I'm up around 18%. The market's up around 22. So just underperforming on a risk-adjusted basis. But I do expect to outperform nominally too as time goes by. So the PL5 Pro needed a tweak, and I made that tweak earlier in April. And so I look forward to seeing how this does and how this performs. All right, let's talk about the PL5. Now this one's more closely tied to the S&P 500, so it will draw down with the S&P 500, maybe just a little bit more, approximately the same. And let me show my account. I can't show you everything because it'll show my account number, but you can see 35,124, 35,124, and the account is the net 35,124. So you can see that I started this on July 16th, 2024, the PL5, up 10.2% the last half of 2024, where the market was up around 4%. And in 2025, this thing is up 6.2, and the market's up about 14.29. You can see overall totals, PL5 is up 17, and the market is up about 19. So I'm just trailing by a couple percentages. I expect to catch up and surpass the S&P, and we'll see what happens here as we move forward. That is the PL5. I'm running that with around actually a $35,000 account. I started with $30,000 on July 16th, 2024. All right, let's talk about the safe wheel. With the safe wheel, the results, the net lick. This out here, 5938. 5938 is the net liquidation. 5938. Now, you notice I'm not sharing my equity curve right now, so I could possibly be adding money to the account, right? So you want to check out my monthly results. Every month I make a video and I show the actual equity curve so you can see that I'm not actually adding money to the account. I think that's a key thing when you look at an instructor. Sometimes they show their P&L or their net lick, but they don't show their equity curve, so you don't know if they possibly added money to the account. That's always a possibility, so you want to see that also. So check out my monthly videos that I make at the end of every month, and you'll see my equity curve, and you'll see that I have not added money to these accounts. All right, so with the safe wheel in 2022, it did around 22%. The market was down about 19. In 2023, the safe wheel did 5.39, and the market was up 24, so underperformed there. And then in 2024, also underperformed, down 14%, which was probably the largest drawdown I've seen with the safe wheel, and the market was up 23. So, and then so far this year, the safe wheel's up 8.3, market's up 14.29. So overall, the safe wheel's up around 18.76. The market's up 40.89 since the beginning of 2022. So let me look at this here. Yeah, so this number is a little bit off right here. So that should be more like this, 40. So I'll fix that. Let me write that down. Fix. So you can see on a risk adjusted basis though, because the safe wheel only draws down about half as much as the S&P. So if you want to make a comparison on a risk adjusted basis, just an approximate number, not an exact number, but you can see that the safe wheel about 37.52% versus 40.89. So pretty close to the S&P on a risk adjusted basis. And I'm actually giving this system away for a limited time for free right now. And it's a black and white system. It's hedged, it's premium selling hedged, and it's black and white. And it gives you a feel. It really will help you learn how to trade a hedged system. It'll help you learn how to trade the wheel better. And I have it available for free for a limited time. It's a complete course. There's a link in the description for that. Okay, so now I'm actually going to trade the safe wheel. I pretty much have made almost every single trade in the account, on the safe wheel account, live. And that's what I do. I trade this live. So I've got my hedges here, and you can see I'm long 100 shares. So I'm going to be looking to write a covered call here. Now there's this put hedge. I have 3 questions that I ask about it. Number 1, is it under 100 days? No, so I don't do anything. Number 2, next question is this put hedge, this $28 strike, close enough to my actual price? So I'm going to do some a number here. So we are using the $28 put. We'll divide that by 37.89. 73%. So if it's under 70%, it's not close enough for protection, but it is close enough, so I don't need to redo that. And so that would be the put hedge. The put hedge is looking good. I don't need to make any changes to that. And now the next question here is this long call. So I bought this long call on Friday. I actually had to pay $17 for it. I normally only pay anywhere between 5 or 6 or four or $5 or $6 for it. But it looks like the Intel is coming into earnings, and there was no strikes available for like $4 and $5. I had to go all the way out to the $55 call, and I had to pay 17 bucks for it. So that's a little heavy, a little much, but that's the way it goes. So I bought my hedge there. So I'm completely hedged. I'm good to go. And now I'm going to go ahead and run the traditional wheel now that my hedge is on. So what am I going to do? Well, I'm long 100 shares. So my goal is to sell a covered call, and my price that I got in, my cost basis is $36. So I'm going to try to sell a covered call at least $36. I won't sell it, at the $35 strike because then I'll lose money. So I don't want to do that. But it looks like it's trading around 38 bucks. So I shouldn't have any issues selling a covered call here. And I want to go as high as I can. So let's take a look at, make sure I'm in Intel, and I'm going to go ahead in the near expiration. And I'm going to sell a call. I want to get at least, say, 38 cents because I'm trading around $38. So if I can get 38 cents here, I can get the $45 call. I can sell this one for the price that I want. And what I'll do is typically figure that out, and then I'll go one back. So I'm going to sell the 44. I'm going to collect around $47, $48, and hope that the price of the stock goes up and goes through my strike, because that would be a very significant win. So I'm going to sell here. I'm just going to do one of these at, looks like $47. Let's see if I can get that. Okay. Yep. So I got that at $47 or $48 actually. So I collected another $48. I'm always collecting every week. I'm collecting premium no matter what with the safe wheel. And the reason why, let me talk about the amount of the sizing here. If my account's between $5,000 and $10,000, which it is, I do 3 put hedges, and I trade 1 wheel, 1 long call, and 1 100 shares or 1 contract. So that's the way. Now, if I had between $10,000 and $15,000, I would do 2 contracts here, 2 here, and 6 here. And then at every $5,000 increment, I would increase this. So that's how you do the sizing for the safe wheel. Also, if you're interested in the safe wheel, you can just get the link in the description. I have it available for free right now, the whole course. All right. Also, one thing I want to mention, the Premier Level 5 and the Premier Level 5 Pro and the Earnings Edge, if you want to watch me trade those live every Monday and Wednesday, I trade those live every Monday and Wednesday. And there's a link in the description. It's called Live Trading with Karl and Avery. So if you're interested in watching me trade live, watching my, I trade my accounts live. I mean, there's some trades that don't make it to the live, but most of them, almost every trade I make is live, and you can see everything that I'm doing in those portfolios. All right, let's see. Go to my notes here. All right, let's see if there's any questions or comments. Kevin, good morning from Lakeland, Florida. Good morning. Kevin says he can hear me. I appreciate that for the feedback there. Tom says good morning. Good morning, Tom. And let's call him Bona because I'm not sure how to say his name. But where can I find out about the Earnings Edge strategy? There should be a link. There'll be a link in the description of this video or pretty much all my videos. So just go to any of my videos, and you will find a link in the description that will give you information on the Earnings Edge. Less is More says, in the safe wheel, What would you consider doing if you were assigned once and the next week you couldn't get enough premium or calls or puts? So with the safe wheel, the way I have it outlined is you can be basically double down, or you could even call it like a martingale type of situation where you would actually sell another put, and you could possibly be long 200 shares. So what happens is, like right now, if I could not sell enough premium for my 100 shares, I would actually sell another put. I would actually add to my position because I can do that because I'm hedged, right? So I'm not afraid to have 200 long positions because I've got 3 short puts. So I would go ahead and double down at that point, and then, but I would not go any longer than 200 shares. So the possibility of owning 300 shares with the safe wheel, if you follow the rules, is not you're not going to ever own 300 shares. You would only own possibly up to 200 shares. So if I wasn't able to collect any premium with the covered call, I would collect premium by selling a put. I'm always ABC, always be collecting, right? Let's see here. Mitchell. Hi, Carl. Why didn't you sell a call near the money to receive more premium? I could have done that, and that sometimes is a good idea. But what I found, what I like is that possibility of making that big chunk of money because earnings is coming up with Intel, and right now it's trading at $38. If I sell the $44 call, I've got all that room between 38 and 44 for it to go up. Maybe it goes to 40 or $42. I make all that money, all that spread in between. If I sell just like right now it's trading at $38. Let's say I sold the $39 call. Yes, I'm going to collect a lot more premium, but then I don't have that chance, to make a lot more money. So when I have a chance to make a lot of money with the safe wheel, I take it basically. But if you or others wanted to run the safe wheel and yet sell something closer to the money and collect more premium, I would not be against that at all. That's a more conservative approach. And that probably would work out quite well also because, half the time you're probably going to make out. The other half the time I'm going to make out. So it's just a question of you don't really know what's going to happen to Intel. I'm hoping that it shoots higher, but if it doesn't, I'm okay. I collected another $48, so I collected pretty good premium. So I'm not too worried about it, right? Of course, how much premium am I passing up? Well, yeah, I'm passing up, $175. I'm collecting 50, so, I'm passing up $125, but the possibility is to make 1, 2, 3, 4, even up to $500. So, I'm passing up 125 bucks, but I'm hoping to make 3, 4, 500. And so it's a little more risky doing it that way, but it's not like risky. So it just depends on what your risk tolerance is. If you want the money in the hand or you want the option to make more. That's a good question, though. All right. One thing I like to say in parting is if the P&L is not real, what else are they trying to conceal? All right. I appreciate you guys. I'm going to go ahead and head out of here. And we'll see you in the next one. I'll be around next week. And we'll see you then. I appreciate you.